I got into all of the mining stocks. I had a couple of spectacular performers. One was a 40 bagger, pretty huge. Okay, so you guys are both stock analysts, and I am more of I like to go for the sure thing. And when I look at every stock index, and it doesn't matter which one it is, or any of the derivatives of gold and silver like SLV and GLD, there's a decay and a loss of value over time. If you look at Barron's Gold Mining Index compared to gold, from 1970 until today, gold has outperformed the Barron's Gold Mining Index by a factor of about 8 times. Wow. So you get this huge leverage, but it's the same thing when I look at the HUI, the XAU, the GDX, the GDXJ, it doesn't matter. Divide it by the price of gold or the price of silver, whichever one that index is most heavily in. And the stocks outperform, if gold goes up $1, the gold stocks might go up $3, but when gold goes down $1, the gold stocks go down $4. Mm-hmm. And so over a period of time, I see these losses, and I tell people if they're going to go, I was lucky enough to buy a whole bunch of gold stocks, 53 different precious metals mining stocks, mostly silver actually, in April of 2003. And I caught the last leg up, if you look at the HUI gold ratio, the last leg up where there was a major outperformance of the stocks versus the gold. And there have been many times, but they're short term. They're more trading things, not investment. So both of you, give me your opinions on the stocks and how to play them, because one of the things I recommend is that people get professional guidance if they're going to go for this leverage and the spectacular gains that you can get. And I got some spectacular gains back then. Luckily, I sold early enough to protect myself from the offsetting losses. But tell me about how you work this, because I know, Dave, that you really study the mines quite a bit when you're picking things. So give me your opinion on all of this.
Well, it could take 2 hours, but I'll be brief. First of all, it goes back to one of the things you're a big believer in, Mike, and that's cycles. So the cycle that you discussed that you personally participated in was the anything goes. There's a pent-up demand for anything gold and silver, especially in the equity side. And a lot of cats and dogs flew along with the moose pasture, and there were some good discoveries. But almost anything that had gold and silver in the name went up. So that was the time to participate in the junior mining sector. And then after that subsided and we started in this consolidation period, you really wanted to be where you make money. Most stocks are based on earnings and who earns money and who doesn't. And that was the royalty company. So I specialized in the royalty companies like, say, Silver Wheaton at the time, now Wheaton Precious Metals, where they're buying silver at $5 an ounce. Hey, it's selling at 15, 20, 25, 30, 35. And so they had huge profit to the bottom line. So that was like almost a no-brainer. So if you stayed in the sector, which, as you say, I specialize in, and picked the right mode or modality, then you could do well. And now we're getting into the last phase, I believe, where we're going to see a run to gold like we've never seen before. It'll start with the majors. It'll move into the mid-tiers, and it'll get very speculative at the top when we're going parabolic. You'll see all kinds of penny stocks with these outrageous names like, best gold stock in the world.com. I mean, who knows what's going to come up. There'll be plenty of that at the end of the market, which is a good indicator for those paying attention and not get too greedy and be willing to take something off the table. And as you said, you got to look at cycles, Mike. You got to look at that Dow gold ratio. Maybe it's time to get back in the Dow. I don't know, but I do know from 40 years plus of experience that nothing grows to the moon. Things do get overvalued. Even the gold and silver market can get overvalued. And if that's the case, you've got to have the guts to tell your followers, your readers, your subscribers, look, I'm getting out and here's why. Follow me or not, to your own doom. In fact, not to belabor the point too much, but I had a call recently with a guy and he followed my work the whole way through. And he said, God, when you call the top, I call my best friend. Oh, Morgan doesn't know what he's talking about. He said, I wish I would. I paid you and you told me to sell. And I didn't sell. I called my friend. He told me, don't pay any attention to him. So there you go.
Well, what the Dow Gold has been telling me since I first discovered it in 2002 or three is that it's from then until today, it's always been a time to be in precious metals, and that there would be a rough road to the ultimate end. But I think the end is going to come with a Dow Gold that's somewhere below 5. It's going to be like 4 or 3 or 2 or even a 1-to-1 ratio again. I have a feeling with the overshoot that we've had, half an ounce of gold should equal the points on the Dow. Jeff, what's your opinion on all of this? And tell us your strategy for picking stocks and so on.
So the first thing I would point out is that in the charts that you're overlaying gold in the HUI or the Barron's or whatever, that's really true. And it highlights that gold is the sure thing and the stocks are more speculative. And so anyone who wants to invest in mining stocks, they really need to be aware of that they are speculating.
That's the reason I say to get professional guidance, because in that basket that was in the HUI index or the GDX, GDXJ, whatever basket it is, there were some super performers. But then for every super performer, there were 2 others that didn't perform or underperformed. That pulled the whole thing down. If you get the person that has studied these companies, you can end up with a big winner. But like you just said to me, it's my Las Vegas money. Sorry, I interrupted. Oh, one other thing I got to say. David, when you talked about the anything goes, there in the 70s bull market, toward the end, there was a pantyhose company that had silver in the name that got listed in a stock market like in 79 or something, and they went ballistic because everybody thought it was a silver stock.
Right.
They're buying pantyhose.
Yeah.
And they rode the coattails of the silver bull. Sorry, Jeff.
I think I remember that. That's right. And that's what will happen. Like David says, probably not till the very end when anything with gold and silver in the name is going to go up and, double and triple in a week and that kind of thing. But the point I wanted to make was that gold and silver miners are not heirlooms. They're not things to hold on to forever. They do cycle, like David is pointing out. And so obviously we want to catch them on an upcycle. And I think that's what's happening now. The value of my portfolio was X on January. It was very different in March, and it's very different today. And it's because of this leverage that the gold and silver miners offer to the metal itself. So there's been some dramatic increases recently, lots of doubles and triples, quite frankly, in the mining stocks since March, and some even more. So I've actually been taking some profits, but my strategy is to stay invested for the most part, find the opportunities out there that are the most attractive to me, and use that as my sort of my offense to increase my net worth. So I'm very excited about it. I think gold and silver miners are going to do some very special things over the years. They've done it in the past, and if you believe gold and silver prices themselves are headed higher, the miners are probably going to 2 and 3 times that.
I'd like to add one more thing. That is, stock market's been the place to be for quite some time, and we have a lot of kind of latecomers with these Robinhood accounts and everything coming in the stock market. My point is why I think the gold and silver stocks will do so well is obviously the metal. Well, not obviously. Obvious to me, they're going to go far higher over the next 3 to 5 years. But everybody out there has a stock account, so it's very easy now in today's world to get on your phone or on your computer with a mouse and hit the buy. And that's why I think there'll be such a move into the equity side of the precious metals eventually. It's not going to be right now where the smart money is. Kind of the stealth money's moved back into this market. I don't know what your subscriber base is, Jeff, but I know mine has increased rather significantly. And all I did was put out our track record last year was I had 7 top tier stocks. All 7 were up. The average between those 7 was a 65% gain, which was double what the S&P did. And these are billion-dollar companies. I mean, this is where you can put safe money, relatively speaking. I mean, the gold stocks have the highest beta, the most volatility, the most risk because of the volatility. But nonetheless, a good stock picker, picking 6 out of 6 and you only have 7 in your top tier list is a pretty good track record. Am I doing that well this year? The answer is no, I'm not. But we're still doing well. In fact, some of them, as you said, Jeff, are hitting new highs now. And these are stocks that I've held for years. But hey, if they're going from here and they're going two or three times on your money, folks, is a great return. And you don't have to look at every one of these top tier miners as a speculative penny stock that occasionally goes from 12 cents to 12 bucks. But those stories that you hear all the time only happen like 1 out of 8,000. So it's a real gamble on the speculative side, which I do a bit of. But most of the money I focus on as if it were my own, which it is, because I invest as I show people that I want to harbor the cash. I want to protect it. I want it to grow, and I'm not too greedy. I want it to grow, better than the gold market. If I can do so, and some years we do, but in fact, most, but not always. But, I probably overspoke it, but that's the idea. And I wanted to just get that out, that there's so many people out there in the stock market now that when these gold stocks go, it's got a big audience behind it.
Mm-hmm.
One of the things that I noticed when I studied, because luckily, I got into all of the mining stocks. I had a couple of spectacular performers. One was a 40 bagger. Pretty huge. Mm-hmm. And then about 2000, when I was writing my book, 2006, 2007, I did this study where I took the Barron's Gold Mining Index, divided it by gold, and I started getting out because from 2010 to today, pretty much, the stocks have pretty much underperformed the precious metals themselves as a group. Not the individual, not if you're picking the right stock. So that's another reason for any listeners. If you're going to do stocks, it can give you spectacular performance, but always get some professional guidance. But one of the things I noticed was that after gold peaked in 1980, the stocks went ballistic on the dead cat bounce. That was really when to be in the stocks, was on the dead cat bounce after gold peaked. They underperformed up until the peak in January of 1980. But then a few months later, gold crashed. When it bounced back up to 650 or 7 something, that was when all the stocks in the Barron's Gold Mining Index really took off. So I want to shift gears and let's go to the disconnect between the global economy and precious metals. Because this is where things just totally get insane. And every day we wake up in the twilight zone and we shake our heads and we're going, how could this be?